Good afternoon. This is Be the Boss of Your Money. I'm Mitch. Thank you so much for joining me. We talk about ways to make sure your money's working hard for you. You work hard for your money. We want to educate you. We want to teach you what's going on in the market, not just say the Dow went up or down by how much or the S&P 500, what have you. The idea is to give you the perspective so you could make better financial decisions. We talk a lot about personal finance. We talk about investing and saving and paying for things in retirement, education. We talk about so much, but today I want to kick things off on the stocks and the stock market. So let's just cut to the tape. Before we do that, if you have any questions, ask me in the comments. I love hearing from you. It's the best part about doing this. And if you have a question, there's a good chance that it's important to somebody else. So you're helping the cause. If you don't mind, give us a like, a heart, an applause, whatever reaction is available to you, depending on which social media platform you're watching on. Connect with me on any of these platforms here. I post every day. I post short 30 to 60-second educational snippets and all kinds of other good financial information and insights. I've got a new series going with a picture and like really cool stuff on it. So check it out. And of course, if you want words of wisdom, words of encouragement, or your favorite emoji in the comments would be cool. And it also, when you give us a thumbs up. It helps spread the word to the rest of your contacts and followers and friends. And you're doing a good thing when you do that. It helps spread the good word. The word about the good work we're doing here. Okay, so let's roll the intro. We're going to talk about Apple. What happened? Its earnings came in better than expected. It wasn't all by flying colors, but iPhone did very well. And then we have to talk about the real problem is that the regional bank debacle, it's really starting to spin, and not in a good way, more like an out of control way. So we're going to talk about that without being alarmist, but I want to give you what could happen, what probably will happen, and we'll take it from there. So here's the intro. Stick around. This is going to be a good, quick show. Hey there. Thank you so much for joining me. We're just getting started. I'm Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money. Let's just take it to the tape first. Okay. Apple reports earnings. The stock is up 86 cents a share in the aftermarket trading. Okay. We'll just get rid of the icons here. Let me pop myself up in here. All right. Yeah. So Apple, better than expected earnings. The stock was up a couple of bucks just a little while ago. Now it's up 97 cents, now 91 cents. So it's bouncing around. We're trying to figure out what the deal is for Apple stock. It is a component. It's the biggest component in the S&P 500. It's like middle of the road components in the Dow Jones, and it's the biggest component in the NASDAQ. So it's an important stock. We'll see. We'll talk a little bit about what the earnings beat means. And just so you know, you can't invest directly into an index, but you could invest into a security that tracks or mimics an index. Yeah, I just worked that right in there, that little disclaimer. Now it's up $1.21. So what did they report? That's Tim Cook. Here we go. This is what they reported. Okay. Earnings beat by a good amount, $1.52 versus $1.43. Revenue beat. This is, to me, an even more important metric. Revenue, 94 billion versus 92 billion. That means that's a quarter. Okay. That's 94 and almost $95 billion in the most recent quarter that ended. Okay. Gross margins, slightly better than expected. That's because they have the sales, the what do you call it? Software services. Services revenue, that's like includes the App Store, and they just won a lawsuit protecting that company. I think it's Epic Games. They sued them and said that the their app store is a monopoly. But the result from the uh, court is that no, consumers have other places that they can go to. Excuse me. I'm sorry. I'm really tired. I was out 2 nights in a row. It's late too. Good events, but that's the way it goes. I'm a big networker, and my business is partially dependent on networking, but partially I just love the networking, going out and seeing my friends. So stuffy. I was at an event last night. It was more like a party. It was just for ACLD. It was just a great time. Poker for Purpose. They, the event raised over $100,000 for the purpose. So it's really amazing to see everybody come together. It was just such a good night. But iPad revenue a little light, Mac revenue a little light. It's really all about iPhone. iPhone is the most important part of Apple. Not the only part, certainly, but the most important part. And whenever services came in a little bit lighter than expected, but it's the most profitable part of the business. So they won a lawsuit against Epic Gaming. Every time you spend money on the app, and when you're on an iPhone, you're always, whenever you use an app to play a game, you're going through the app store. So if you buy anything in game or a new app purchase, or you buy anything through any app, you spend any money through your iPhone, you are, as long as it's through the app, the Apple gets about 30% of that money. So it's an incredible business for them, and it's incredibly profitable, super high profit margin. All right, so that's where Apple is. But enough of that. Let's talk about where major averages closed. So the Dow down again, down 286. This has been a really tough week for the year. Just to give you an idea of how bad the Dow is doing, all of a sudden, the Dow is down now. Negative. It's negative on the year, down 2.64%. Okay. So major averages were down across the board. Gold continues its ascent. Oil was up ever so slightly, but still under 70. Oil's in the high 60s. Why? Because people worry that, there could be a recession coming and we'll use less oil. The 10-year yield further into the 3.3 range. The VIX popped its head a little bit above 20 today. So that's a little bit of a worry coming in from investors. Typically, if the VIX goes up, it goes up to about 30. But lately, anyway, it goes up to about 30. That's when the markets become oversold, and then we start a new rally. We'll see if it repeats itself. But as long as you know that, you should be educated on that. And what else? We did that one. Okay. Let's take a look at the banks. Pacific West down by half. Now, Pacific West is a bank that I never heard of until this whole banking debacle. But it's you're hearing about it now because first Silicon Valley Bank went bust. We spoke about that extensively here. Remember, we had a whole show dedicated to that. Then we spoke about Signature Bank. They both went under. And then First Republic was the next in line. And they did everything they could to save the bank, but it just wasn't enough. Once people lose their faith in a bank, once depositors and investors question their confidence in a bank, it's too late. They've already lost confidence, and there's really nothing you could do to stop it. So depositors yank their money out and they put it into another bank. Once it starts, then the next depositor has to think, well, now I have to move my money out of the bank. And it just becomes like a negative feedback loop, self-reinforcing negative feedback loop where everybody just has to get their money out before the next depositor. And once it happens to banks, it's from what I understand and from what I see here from my own experience, it's impossible to stop it. And the money just goes to one of the mega banks, the JP Morgans of the world. So Pacific West, it's pretty much, in my opinion, it's a done deal. There's nothing they could do. They're just going to have to go under. I wouldn't be surprised Sunday night you see the news. Pacific West closed and acquired by regulators and sold to some big bank. Now Zion Bank, it's happened. It looks like it's happening too. KeyBank has never been a high price stock, but First Republic is at 38 cents. It's a penny stock. I wouldn't touch it. I don't touch penny stocks. That's the deal. But the two banks that are scaring me right now is PNC. and USB, and they happen to be right next to each other. So for USB, I was just with a friend who, after the bank debacle started, he's a active investor. He's like, "Oh yeah, USB was like 33, 34." He's like, "Oh yeah, I bought it. It's. I mean, that's a great bank. I think it's a great buy here." And I'm like, I don't think you have to be a hero and buy them. I think you should just wait." And here it is at 28 and change, and PNC is down 3. These are the two banks. If you notice, I put in the title, these are two bank stocks that I'm watching, and they're scaring me. It's USB. Let me put this up here. Just realize you're not looking at what I'm looking at. USB at 28, down 2.75%, and PNC down 2.58%, down $3. And if you notice, they're pretty close to or at by their year lows. All right. US Bank and PNC are not systemically important. Sci-fi, systemically important financial institutions, sci-fi. And they're not systemically important, but they are. I don't even know if you call them regional banks anymore. They're super regionals. Let's call them that. They are major banks, way bigger than like Silicon Valley Bank. I mean, they're really big banks. And their stocks keep going down. And what's happening is this fear is spreading from the smaller banks to the small regionals. It's starting to spread to the big banks that investors are not comfortable. There's something wrong. Their balance sheets are messed up because interest rates are going up. So the assets, excuse me, so the assets that the banks are holding are dropping in value, and it's exacerbating the problems of the banks. They're going to have to hold back on lending, which could push us into recession. If we go to recession, borrowers stop paying their payments on their debts, their business debt, their corporate debt, construction loans, mortgages, credit cards, cars, etc., and that hurts the banks. So it's like a negative feedback loop of everything you can think of is going to hurt the banks, and the bank stocks are just persona non grata by investors. But systemically important is J.P. Morgan, Bank of America, Citigroup, HSBC, Barclays, Goldman Sachs, Bank of New York, Morgan Stanley, Santander, State Street, Wells Fargo. I'm surprised Santander is in that list of systemically important banks. But whatever. But PNC and US Bancorp are so big, it would take a massive rescue operation by the government to save them. And what happened in the banking crisis, the 2008 financial crisis, which resulted in the Great Recession. Sorry, okay, I'm really stuffy. So what happened is Fannie Mae and Freddie Mac got $100 billion buyouts. Then there was TARP, a $787 billion program to inject, I'm quoting, inject money, to give money to banks on a temporary basis. Discount window was open. Fed funds rate was lowered. But nothing could stop the downward spiral until it hit bottom. And that's like the scary worst case scenario with the banking sector, is that they are going to keep falling apart one after the other. But if it gets to PNC and US Bancorp, especially at the same time, they're so big. It would take such a big rescue that if they had to be rescued, huge banks like that, we'd all be in trouble. As far as the stock market goes, investing, everything, it would be a disaster. Really, that would put us into a whole higher level of really bad recession, great financial crisis, etc. We'd be back in 2008. And if they go, they take others with them. That's the thing about banks. When a bank goes down, it takes other banks with it. It always happens because banks are dependent on one or the other. They're all interconnected. They all borrow and lend from each other. They'll borrow and lend to each other, borrow from and lend to each other. So that's what's going on here. People are concerned about this negative feedback loop, this domino effect that does not quit. And we don't know what's going to stop the banks from going down. We don't know what's going to help investors regain confidence in their bank. That the bank isn't going to fold. I have clients who are business customers, and they've got millions of dollars in their payroll, and they're moving to big banks because they don't even want to be bothered with it. They don't care if the smaller bank pays more interest. They just want their couple $1 million to be safe so they could keep it for payroll. They don't want to have to come and spend millions of dollars out of their own pocket. what this is going to do, it's going to reinforce that you should be with a big bank. So we'll have fewer banks, bigger banks in this country. But man, oh man, if companies like US Bank Corp and PNC are having trouble, imagine how bad that's going to be for the rest of the banking sector. And this way the stocks are trading, it does look pretty troublesome. So that's what's going on with the regional banks. And this is why we just can't get our arms around it, because we don't know who's next. We think we do. It's probably PacWest. But after that, this is just, it's just, we're always going to be, it doesn't matter what bank is saved or given money. We're just going to immediately focus on the next bank debacle until something changes. What that is exactly, I don't know yet. Probably the Fed cutting rates. But the Fed's insistent that they not only they don't want to cut rates, but they want to keep rates where they are for at least a while, if not raise them. All right, so that's the story for today. Thank you so much for watching. I'm Mitch Goldberg. If you have any questions, hit me up in the comments. If you're watching the replay, thank you so much for watching. Hit me up in the comments there too. I will see your comments. I will answer you. And if you want to schedule a one-on-one call and talk more about this and how it affects you in your retirement, you can check out clientfirststrategy.com. My contact information is there. Reach out. Don't be shy. We'll talk. It's probably worth your while to have a 15-minute conversation with me. And I will talk to you soon. See you Monday. Thanks.